Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's March 25th. We got a few economic news releases to jump into today, so we're going to go right into it. We'll start with the Case-Shiller home prices. This is the survey that's done over the 20 large markets of the U.S. where home prices are moving, and this is for the month of January. So back in December, we had a 13.4% year-over-year appreciation. So the month of January, it simmer down a little bit to 13.2. So a lot of it had to do with holidays, so we'll have to kind of keep that in mind. And then we have the FHFA home price index. This is another survey that's done for home prices, kind of a gauge as to where home prices are trending. So we had a 7.5 for the month of December, and month of January it also simmered down a little bit to 7.4. Again, we have to kind of keep into account that this is the holiday season as things winded down for the holidays, so we'll have to kind of see if this trend continues or it gets heated up a little bit further again. We have the consumer confidence for the month of March, and we had a 78.3 on the index, and it was supposed to have a slight impact or a slight increase to 78.4, and actually jumped up to 82.3. So good numbers on consumer confidence, meaning the consumers are feeling a little bit more confident where things are moving, trending towards economy-wise. And last but not least, we got the new home sales for the month of February. So we had a 468,000 new home sales for the month of January, and we had 440,000 for the forecast, and it came in at forecast. So again, a lot of this is the holiday season. We had interruptions with bad weather on the East Coast, Midwest. So even today, yesterday, I even heard that they're still getting snow in Minnesota. So so a lot of this is we'll have to kind of wait and see later in the spring and summer, see where things move towards. But we also had the confidence level for home builders were even lower. So we'll have to kind of see if they have a little bit better forecast later on, or if those things change. So again, those are things to not to be alarmed about right now, but something we'll want to kind of watch to see if that continues to become a trend. Let's go ahead and take a look at the headline news right now. And currently the stock market's up. A couple of the indexes aren't too high, so they're kind of going back and forth a little bit, up and down a little bit, but so there's not a lot of trading. But as we've done this report, it was currently up overall. There's also some comments that were made by a Fed member, Plosser. He actually amended one of his statements, but he had initially thought that 2016, his forecast for end of 2016, that the interest rates were going to be going up to 3%, the Fed funds rate. So currently the Fed funds rate's at 0.25%, so basically near zero. But he revised that to actually, he thinks that's where it's going to be at end of 2015, and end of 2016 will probably go up to about 4%. So this is definitely a correlation to those who are doing adjustable rate mortgages, to home equity lines of credit, as it does play a role in the Fed funds rate. So how you figure out the Fed funds rate is you got prime, for example. Prime is 3% over Fed funds rate. So currently the prime for home equity lines of credit, it's 3.25% plus whatever margin that the lender may charge on top of that. So that could potentially go up another almost 3-4 points over the next year or two, so 3 or 4%. So you may want to be wary of what kind of loan you currently have, and if you've gained enough appreciation, maybe you might want to lock into a fixed rate if you're going to be in the home long term. Also for adjustable rate mortgages, the LIBOR does correlate. So when the Fed funds rate does go up, the LIBOR does tend to go up as well, almost instantaneously. So people who have adjustable rate mortgages may want to lock into a long-term rate as well. That might be something they may want to keep their eyes and ears open to as well. All right, so let's go ahead and take a look at what the bond market is doing today. We have, yesterday we were up and we pulled back, so we basically closed yesterday, as you can see, even to what it was on Friday. So Monday's numbers were basically, the close was where we left off on Friday. Each day, as you can see, we actually are starting much lower. So we are dropping down about 17 basis points, and then we're rising. So currently we're up about 7 basis points from where we left off yesterday. So it's not enough for a price improvement here on the West Coast. East Coast, earlier on, they probably had a price for the worse because it started so much lower, and then over time in the morning, it has gone up, so they probably had a price improvement on the East Coast. But on the West Coast, because we start later and typically get our rates around 9 o'clock, our rates are about the same where we left off yesterday. Okay, folks. So again, not much change in the interest rates today. This is something to really kind of gauge because obviously the markets are still trying to find itself. And we do got more economic news releases scheduled for later this week. So you guys have a wonderful day. Thanks for watching, and see you guys tomorrow.